What time is the PTA meeting? I'm going to resign now. Oh boy. So let's try not to have that.
No, we're always nice and acceptable.
Yeah.
Ish.
We're always nice. Maybe not always acceptable. Oh, mercy.
All right. So I am recording this. Is that okay?
Thank you.
After that conversation, I'm recording it now. So
there you go. I couldn't believe that happened. It was terrible.
Okay, so it is 1 o'clock, and whenever you guys are ready, we can start.
Perfect. You want us to just jump in?
I mean, I can give a little introduction.
That's what. Well, I didn't know if you guys, you meant me or some other guys.
Oh no, you and Marina.
I gotcha. All right. See, we're off to a great start.
Oh, actually, before I'm going to make a little disclaimer. The office internet is down and it's running off of a hotspot off my phone. So if there is some glitching, pauses, please bear with us. And yeah, actually, you know what? I can probably make someone else. Heather, I'm going to make you a co-host. So in case my internet goes down, it'll still continue. Okay. All right. We are good.
All right. Well, without further ado, then I am Joanne Koontz. Are you looking for me to get started?
Mm-hmm.
I thought you were. Okay, perfect. I didn't know if you were introing or not. I'm Joanne Koontz. I'm an attorney and CPA here in Sarasota, and I'm here today with my partner, Marina Parkin, also CPA. And we wanted to talk to you a little bit about your business and how to more efficiently run your business from a financial perspective. Lots of these classes try to get you to do more, work harder, learn how to use, Facebook Live in your listings and things like that. We don't want you to do any more. We just want you to keep more of your money. So in order to do so, if you've heard this topic before, you're back for more. And if this is your first time, make sure that if anyone has any questions, we're happy to field those as we go. We're going to be talking about how to operate the business from a legal standpoint. So, and also from a tax perspective and how to run that most efficiently. So from a legal perspective, what you'll see is if you've got agents that you know who have been in the business for a while, you'll see on their signs and on their materials that they might be Joanne Koontz PA. And some are PLLC and some are just Joanne Koontz Realtor. We'll reserve a little bit of time at the end specifically for teams because I know there's a lot of teams inside Keller. But right now I'm going to talk just about individual agents. This will translate to your operations on a team as well. I, as a lawyer, of course, I'm always worried about liability protection. So I'm always talking to people about having a company, an entity structure, so that we can minimize your exposure to liability. But nobody really thinks anything is going to happen. I'm not sure how Morgan & Morgan became for the other people if nothing ever happened, but they're busy and something happens, but no one ever thinks it's them. So if it's not you, then no worries, you won't have any liability. But you might want some tax savings. So stick with me. If you are worried about liability, then you're going to want to look at an entity structure as well. The two entity structures that are most common for agents are the PA and the PLLC. The PA is a professional association. That's what that stands for. That indicates it's a corporation for state law purposes that requires you to have a license to do your job. So you'll see lots of law firms, CPA firms, agents, engineers, architects have PAs. You also have the option to have PLLC. Our firm, Kuhnson Parkin CPAs PLLC, and my law firm, Kuhnson Associates PL, are both organized as PLLCs. That is a limited liability company where you have to have a license to do the job. So it's professional limited liability company. The reason you see more agents as PAs than PLLCs, particularly the seasoned folks, is up until about 10, 12 years ago, FREC would not allow you to be an LLC. So your only choice was to just be an individual or to be a PA. So that's why you see so many folks as PA. In the corporation, we do have some formalities that we're required to adhere to, and that's things like holding an annual meeting, keeping minutes from that meeting, et cetera. Those things are great ideas in an LLC. They're just not required. So you're not sacrificing or jeopardizing your liability protection if you fail to have meeting minutes from an annual meeting in a PLLC, whereas you are jeopardizing your liability protection if you have a PA and you're not observing those corporate formalities and holding those meetings. Now, if you have a PA, sometimes people say, well, should I switch to the PLLC? I don't typically advise that, as just know about the paperwork requirement and start fulfilling it. If you say I've been a PA for 10 years and I've never done this, you can catch up your missed meeting minutes and get your governance back in order. What you can't do is do that once there's a lawsuit. You can't do it in contemplation of defending a lawsuit. That's a felony. So we don't want to go to jail. Now, with respect to the PA and the PLLC, they're going to operate much the same. Both are going to require that you file an annual report on SunBiz every year by May 1st. Both are $150. You do need a separate tax ID number. You do need a separate bank account. You need to use the separate bank account. Pay your business expenses out of your business account and your personal expenses out of your personal account. Marina will go off on a 20-minute tirade about commingling and paying business expenses with a personal Amex to get points and how that doesn't work out very well. The best thing about having this entity structure is it gives you a choice of taxation. So when people are very familiar with SunBiz and they say, oh, I went to SunBiz, but I didn't see S corporation. And you just told me for tax purposes, I should be an S corporation. An S corporation isn't a thing to be, it's a manner of taxation. So just like the IRS doesn't have an LLC tax form, you have to make an election for tax purposes. SunBiz doesn't have an S corporation box to check for formation because it's the name literally comes from subchapter S of the Internal Revenue Code. So it's an IRS option really that you have to put on top of an existing company. So you can't do it if you're just Joanne Kuhn's realtor. You cannot take advantage of the S corporation. Now, let me fold Marina in and get just a little bit on the basic benefits of the S corporation.
Well, Joanne, before we even get into that, I kind of wanted to play some of the questions that at least I get a lot when people come to see me on tax side before they came to see you on the legal side. Here's kind of the questions that I have. Hey, so I formed an LLC. So what do I do now?
Cross your fingers? No. So there's a lot of things to do after the formation, and I've got a handout for you guys that will talk about exactly the steps to take. So the formation of the LLC is the beginning and not the end of the process. That's the very first step on my list, is form the PLLC. That's usually where people stop and are like, why do you need a lawyer? Like, I totally just form my own LLC. You can. Just like when people list their own property and use cell phone pictures, it doesn't go so well. It doesn't typically go so well when people do their own LLCs, but what do I know? You also need to get a separate tax ID number, and that is a pretty straightforward process, but nonetheless, you get that on the IRS's website. And we need to file that S corporation election form. There's a due date on that, and there's some ways around that if you're not certain if you need the S corporation right at the immediate minute that you file. Most importantly, and most frequently overlooked, besides forming the LLC, is moving your real estate license with FREC. So FREC has a little form called RE16. I think they charge you $30. There is no expedite on this. Let me tell you that. There is no way to speed them up. All you can do is FedEx them the form so that they get it faster. They will put it in the pile and they will address the pile when they get near it. So on average, I would say it takes them 2 to 3 weeks to get through an application. So you're typically around a business week or so with Sunbiz to get the LLC formed and get the confirmation back from the Secretary of State. And you get the tax ID number immediately, but the FREC license change takes about 3 weeks. You will physically receive a new license in the mail. You'll literally get the new form. It will have the same expiration date and the same number. It's very much like a lady getting married. All they're changing is the name. So the licensee will now become Joanne Kuntz PA or PLLC. So Joanne Kuntz no longer has a license, which means we also need to be cognizant of whatever you're using for your document suite, whether it's Transaction Desk or Form Simplicity or Dotloop. You need to update that because now the listing agent or the selling agent is now Joanne Kuntz PLLC. I, Joanne Kuntz, the person, actually no longer have a license. This is imperative. If you don't do this, you don't have an LLC. You have one, but you are not running your real estate business through it. The brokerage is required to pay the licensee. Otherwise, they have penalties. So what will happen is once you get your RE16 processed and you receive a new license in the mail, you will at that point you should at that point submit the W-9 to your broker's office to let them know that now they need to be paying the PLLC and not you. It's going to reflect your new tax ID number. You should get your first commission check in that name. And this is just like when you change brokerages. There is a day. Before that, you are individual, and after that, you are PLLC. There's nothing that we can do to backdate this election in terms of the formation of the LLC or the S corporation election. Those are effective as of the date you form. So when your license gets moved, that's when you can start to enjoy the tax savings that Marina will talk about. You can't tell the broker, hold my check, pay me next week. They have to pay the person who is licensed at the time the closing happened. So if you do not do your tax planning and you find yourself in the most glorious position of overpaying tax because you were on both sides of a great deal, we don't want you to pay tax more than is necessary. But if you're in both sides of a sizable transaction, we've seen people overpay. And unless you're going to extend the closing date, you're going to take it on the chin, because unless you want to go to your client and say, hey, we need to push closing out a week because my taxes aren't in order, that doesn't usually go over too well. So
Joanne, can you talk a little bit about the name, because we get that also. Yeah. That seems to be a huge confusion as to what you're allowed to call yourself. What should your PA or PLLC be called?
So you don't really have a choice with your name. Freck took care of it for you. It's your legal name, first name, middle initial, last name, or first name, middle name, last name. You cannot use a nickname. If you are Joseph, you cannot be Joe PLLC. You're stuck with what mama gave you. So if you go by Joe, what you can do is form Joanne Kuntz PLLC, and then on your business card and on your marketing materials, I might be Joe Kuntz of that firm. So what you want to very much avoid is thinking of saying things like, well, it's just me. Mm-hmm. If you treat this company as though it's just you, that is Morgan & Morgan's very first objection to overcome the corporate veil protection. So in English, the liability protection that you get from having an LLC, Morgan & Morgan has a sword that they're trying to poke through to get to you personally for additional revenue to collect. And their first argument is going to be alter ego. They're going to say this company is no different than this person. Look, they've commingled their funds. Every single time that they went to dinner, the company paid for it. The husband and the wife never, ever, ever, ever went to dinner personally, ever, when we looked at the personal bank statements. You paid all your business expenses out of the personal, you paid the mortgage out of the business account. Those kind of things are a disaster for tax purposes, of course, and then are also detrimental to your liability protection. So when it comes to the name, we need to use it. Like I said, a lot of people run into abbreviated names or nicknames, and and those are not permissible in the name. You also can't use anything but your name. So sometimes people will say, well, I formed Suncoast Real Estate LLC, and that's what I'm going to use. No, you're not, because FREC won't let you. And the issue is SunBiz doesn't know FREC's rules. SunBiz doesn't care. As long as you pay, you can call it Mickey Mouse and they'll take your money. So it doesn't, don't falsely perceive the fact that SunBiz did the registration as some approval. All SunBiz is saying is that no other company in the state of Florida has the name.
Mm-hmm.
That's the only assurance they're giving you. Or at least hasn't had the same name within the last 2 years of being dissolved. So
can you use a DBA, Joanne?
No, FREC will also not permit the use of a DBA. You can use a DBA in a team LLC, but you cannot use a DBA in your PLLC. Again, FREC's only concern is with avoiding misleading the public. So to FREC, it's very important that the name on the sign leads the public to a person with a license. So that's why they're fussy about that. If you have a DBA, then how do I know? The general public has to work too hard to figure out who has a license and who I can talk to and rely on the information that they're giving me. Now, sometimes with the transfer, with the commingling, people say, well, I only paid the mortgage out of the business account because that's where all the money was. I made commission. How do I get it to my personal account? Most of the time, we recommend that people are banking at the same institution for their business and personal. If you have those linked and you're comfortable banking online, you can just do a transfer. You also can cut a check, but it's not necessary. You can just do an online bank transfer, call it a draw, track it, because Marina would want to know what your draws were for the year. And you'd pull that money into your personal bank account and then make your payment for your mortgage payment or whatever your whatever bill you need to pay personally. That is so imperative. And if you are new to the business and you don't have commission income yet, the flip side is true. You may be taking personal money, transfer that to the business account, track that as a contribution. And Marina's going to want to know about that on the tax return as well. But those contributions, we still want to put into the business bank account and then pay your business expenses. We've seen people pay advertising fees out of their personal accounts to get the MX points, and then they forget to tell the bookkeeper or put it on the Excel spreadsheet. And so then you get to tax return time and you've not deducted anything. And the reason that you've not deducted it is because the person preparing the taxes didn't know anything about it. And that's the problem. So we do need some kind of bookkeeping system. And when I say that, I don't mean run out and buy QuickBooks and start mastering QuickBooks. Master real estate and hire a bookkeeper.
Absolutely right. Yeah.
I mean, we've been in accounting for 20 something years and we have not mastered QuickBooks. So
no,
don't even try.
QuickBooks is one of those things where people hear that that's a bookkeeping system and they think that just because I bought QuickBooks, it's just like forming the PLLC, but not moving your license. It's the same thing. Mm-hmm. I have a QuickBooks file. It's on my desktop. It's great, but unless you're actually using it to track your income and expenses, it's a complete useless thing. And mm-hmm. people really do get bent out of shape about it because they feel like that's the only way to keep straight. And to be honest with you, using Excel has just been fantastic. If you set up your categories of the expenses that you're tracking in Excel, you sit down mm-hmm. once a month, you fill it out, and then by the end of the year, you've got your numbers. And it's even less so for tax reasons, but first and foremost, it's for you, the business owner. You want to know how your expenses are tracking, mm-hmm. and then you also want to know, is it creating any relationships that you can understand between what you're spending on certain type of advertising and the sales that it's driving. And this may take a little time for you to see the trend, but if you set this up from the beginning correctly, then you can use it consistently over months and years to then say, okay, I can see some sort of relationship. So it's mm-hmm. first for you as the business owner. And then, of course, it makes it so much more convenient at the end of the year when we have the proper information to put for tax return and also do tax planning for you in the mm-hmm. middle of the year or October, November. You know, last year was a crazy, just insane year. And I have to say that I have done more tax planning scenarios last November and December than I think I have in the past maybe 10 years put together, because people were nervous. A lot of realtors made money, and the ones that had their stuff together and had the numbers for me, we ran them November, December, and they are prepared for the tax impact or the decisions on what else should I be doing before the end of the year. So it is really important for you to really create a good system where you're tracking all different things.
And a well-used, very simple system like Excel or colored construction paper works better than a heaping pile of stuff with great intentions to enter into QuickBooks.
Absolutely. Absolutely. Even if you have a separate folder, I have a few realtors that, you know, they're not quite tech savvy and they don't even want to get into this. You know, they have a folder for every type of expense and they keep kind of a running total on top of the sheet of the folder. And then at the end of the year, they come to me and then they bring that. I'm not going to go through the receipts inside the folders, but knowing what type of categories you've set up for yourself and what the tally is of that, that's a system. And that's fine, you know. And then if we do want to look for a receipt, we have it, but we don't need to because she's already kept track of what is the total in that particular folder. So I can, Joanne, anything else before we jump on the tax benefits of an SCorp? I know you tried to talk about that a few times and then I kept interrupting you.
I'm so excited about it. The problem is for me, everyone wants to talk about home office and like other little ways to save. And I'm like, look, if you could just get an SCorp, people will sleep in the parking lot at Best Buy to save 15% on a TV. And they will not just go get an SCorp to save 15% on all their income. So it's like, I don't know, that goes in my journal because I'm kind of like, I don't understand that. One thing I will say before we move on is to how beneficial this is. A concern that gets raised to me a lot of times is people say, look, I am not an accountant. This is overwhelming. I don't know if I could keep track of all of this. And to Marina's last point, this is all stuff that needs to be tracked anyways. All we're changing is the form on which you're going to report your income and expenses. We're not changing anything about how you should be doing it. So this should not, the initial formation can be overwhelming because there's a lot of moving parts and there's a lot of different agencies that don't talk to each other. So understanding what to do in what order and when to do it is concerning. But the aftermath, once you're set up and running, you do kind of return to life as normal. We just need to be mindful about the commingling.
So let's talk a little bit about the tax part of the S corporation. And this is really, a lot of times people start out with, ooh, I heard I have to be an S corp, what do I have to do? And I give them a little song and dance, and then I funnel them to Joanne, who can actually do the PLLC formation first. And people say, well, I heard that you can backdate the S-Corp. You absolutely can backdate an S-Corp election, but you cannot go earlier than the date that you form the entity. So for us to do an S-Corp election, we have to have a legal entity already formed. And the timing, before we get into even anything else, the timing here is key. Joanne made a really, really important point about FREC taking weeks to move your license. What happens in those weeks is that if you have a closing and the check comes to your personal name, this is how your brokerage is going to report it at the end of the year on a 1099. It's going to be your name and your social security number. Now, fast forward 2 months, you formed your PLLC, we made an S-Corp election, we have an EIN number, everything is fantastic. You want to put all of that income under the S corporation. However, there is a 1099 with your personal name on it. This is where it gets a little bit iffy, because sometimes you can tell IRS, hey, this income, I meant for this income to be under the S Corp and it was incorrectly reported under my personal name. So please excuse me while I move it over to an S corporation. More times than not, the 1099 that is issued under your individual name is what's going to trigger IRS to actually find that on your personal tax return. So now if you're shoving that income in the S Corp, you're going to get into, if not a change audit, but at least some back and forth rigmarole with IRS to say, why wasn't it reported here? Why, show me the backup and on. Sometimes you can win and sometimes you can lose depending on who gets assigned to your case, which is why I always tell my clients that if you're going through this procedure of the PLLC, you have to accept the fact that until your PLLC is in place and all of the steps are done, your license is moved and your broker is properly notified and reporting your income, you really can only start utilizing true benefits of being an S corporation after everything is said and done and all the T's are crossed and the I's are dotted. So let's get into this whole S Corp a little bit. So the benefits on the tax, what are they? So when you are just an agent and you've got all of your income under your personal name, you are considered self-employed. What does that mean? You're not just paying income tax on that income. You're also paying Social Security and Medicare tax, and you're paying that twice because you are now the employer and you are now the employee. The Social Security and Medicare tax is 7.65 on each side, so that adds to over 15% in tax on your net self-employed income. Now, this is net self-employed income, so you take your gross commission minus your expenses times the self-employment tax rate. What ends up happening is a lot of the things that people think are going to be deductible are, and they make a difference on the income tax side. For example, child tax credit, dependent care credit, health insurance deduction, contribution to an IRA. These are all the things that reduce your taxable income subject to income tax. Unfortunately, that self-employment tax is literally your net income from that self-employed business times that 15.2%. And I cannot tell you how many times I pick up an agent's tax return and their payroll tax, that self-employment tax, is actually higher than their income tax because they've put all these strategies in place to minimize their income tax, but those are things that don't work. And then they say, oh my God, I can't believe I'm paying, 30% effective tax rate and I only made 100,000. How is this possible? It is because when you're looking at your taxes, it's that self-employed, i.e. Social Security and Medicare tax that gets you. And this is where the S Corp comes in. So it's the only structure that IRS allows you to have as a corporation where the income is still subject to income tax in your hands as the owner. But the income that's coming from that S corporation to you, the owner, is not subject to Social Security and Medicare. Okay, so I'm going to say that again. That income is subject to income tax, not to Social Security and Medicare. It is the only pass-through structure where you're allowed to take advantage of that. And this is the reason why, 98% of the small businesses in general are organized as corporations that do active type of business that normally would be subject to payroll tax, but being an S Corp allows them to avoid that. Now, what's the catch? So IRS says, great, I am so happy you formed an S corporation and please enjoy the benefits. However, if you were self-employed a minute ago, we would have collected all the Social Security and Medicare tax from you. But now, because you've now jumped into the S Corp tax status, you're now not going to pay me anything? That seems a little unfair. So what IRS says, look, you are now the owner of this company, and we know you are working in this company. So to kind of give you a little bit of an equal footing with other people that also are in the workforce, your company has to pay you a salary. Now that salary, now you're as if you're an employee, is going to be subject to Social Security and Medicare tax. But the rest of the net income that you're taking from the business is not. And that's where the savings really lie. Now, what is the salary? And I believe that we're actually going to be holding our own webinar in probably a few weeks to talk about reasonable compensation. But generally speaking, there's no golden rule. There's no magic number of what that is supposed to be set at. But the idea is that you look at if you were to go and get a job doing what you're doing now, how much would you get paid? If you were hiring somebody to do what you're doing, how much would you pay them? The other thing we look at, which is very typical in the service industry, is the gross revenue that you are generating in the business. And typically, if you've got salaries of about a third of the gross revenue that you're bringing in, that is going to be considered reasonable in the service industry. So if, let's say, your gross revenue is 100,000 in commission that you're bringing in, we want your salary to be somewhere between 25 and 30,000 to stick in that 25 to 30% range. Now, what happens here is, again, on the salary, you're paying income tax and payroll tax. On the rest of the net income that's coming to you from an S corporation, you're paying income tax only. And so the savings in my 100,000 example, if we shelter about 60 or 70,000 of it from that 15% payroll tax, that's $11,000, $12,000, and that's every single year. So it's not just the first year that you do it, it's every single year. And that's when people say, well, it's, I got to do more stuff. I got to file the SCorp tax return. I got to pay myself the payroll. So I have to do the quarterly payroll filings or pay somebody to do it, or whatever the case may be. If you're thinking about the savings every single year of multiple thousands of dollars, you really have to look at what it's worth to you. So that's really money in your pocket that you're not sending to IRS. There's really no reason to leave it on the table. What happens too is a lot of times the agents come to me and they bring me their tax return from last year, and the tax return is proper. So they've reported it as a self-employed schedule. They have a PLLC even, and they're showing themselves as self-employed because they never went through that SCorp election setup. And they've maximized all the deductions, and they still feel like they're paying too much tax. And that's the time when we say, well, what about an SCorp? A lot of times you don't get that from other accountants, or maybe you've been TurboTaxing your tax return. There's nobody in TurboTax will tell you, hey, wait a minute, you are a self-employed individual making, over 40 grand. You should really consider an S corporation. There's nobody like that. So you really need to talk to a professional who understands the small business setup, who can then advise you that you should be in the SCorp structure versus the self-employed. It doesn't work. The savings may not be worth it at every single income level, but through our experience with myself and Joanne, we've determined that it's really worth going through the SCorp tax return, going through the payroll setup and everything, once you're hitting the net income of about 40,000. So then it's really the cost of administering everything are definitely worth the savings every year. In terms of the tax benefits of an SCorp, let's talk about that. So never mind that we've already saved everything in payroll tax, and now we have salary, and we're doing all of these things. One of the other things that is very important is that the expenses that you are showing on the S corporation tax return are a lot better received by IRS than they are on the self-employed schedule of your individual tax return. And that's the key. It's the audit risk is higher for a self-employed individual who's reporting their income on Schedule C, particularly a high earner, as opposed to reporting that same income on an S corporation. Mm-hmm. And we're talking about key sort of items that everybody is always after, which is car expense, telephone, home office. These are all the things that show up on the individual return that can definitely trigger somebody to look at, but are a lot more reasonable when they show up on the business tax return. So just that itself creates a huge benefit of having an S corporation. The second thing is by having an S corporation and paying yourself payroll, you're opening up more opportunities for things like retirement plans. So if you're self-employed, you've got an IRA, you've got a SEP IRA that's available to you. But when you are now an employee of your own company, you've got things that are available that are like a solo 401k, for example, which a lot of my high earner realtor clients take advantage of. Not to go down that rabbit hole a lot, but if you have a solo 401k as an employee of the company, it gives you the ability to contribute as the employee. So let's say if you worked somewhere else and they had a 401k plan, you as the employee can contribute. But now in addition to that, because you own this company, you can now also create a match as the employer. So now you're contributing to your own retirement plan on two sides. And because it's a solo 401k, you don't have a limit on making the match only a small percentage as you would typically see in the employer situation. So you as the individual, as the employee, can contribute about 19,000. The limits vary every year. So let's say it's 19.5 this year, I believe. And then you as the employer can match up to 25% of the salary, which is pretty good. So if you set your salary up to be pretty reasonable and you're a high earner, you can put away 40 to 50 grand in the retirement plan savings every year. And you're combining that with being an S-Corp and not having to pay the payroll tax on the entire income. So even if you realize the savings by becoming an S-Corporation, and then you take those savings and put them into the solo 401k plan and let that grow for you, there's the money that you will never find again. And that again is every year. And I cannot talk enough about this. So pension plan definitely becomes something that's uniquely available to the owners of an S-Corp. Again, you still have access to regular traditional IRA and a SEP IRA, but having a solo 401k is definitely something that you need to have when you are an employee and an employer. That's the only thing that's available. So these are the kinds of things that I wanted to bring up. Joanne, anything else on the tax side? Of course, the situation varies, individual to individual, but when you come for a tax consult, we look at your particular situation and we say, what else can we do with your life, and then how can we make that work for you? Another great example of when having the a separate S-Corp is if you have kids that you can hire. So if you've got kids that are now old enough to do work, first of all, they do not have to be under legal employment age. So they don't have to be 14. You can have a 12-year-old do some reasonable work for a family business and still be on payroll. By paying your kid's salary, your kid has up to $12,000, which is the personal exclusion that's available to everybody, to have income that they do not need to pay income tax on. But you get to deduct that from your company. Okay, and then now your child has some earned income, which now they can go and put into their retirement plan. So that is definitely a good income splitting with family when you, again, that's available when you've got an S-Corp. You can still take advantage of those things too when you're self-employed, but they make a lot more impact in an S-Corp structure. Any other thoughts, Joanne, here?
Well, you just took all the thunder and ran. No, no, I think, you covered, I wanted to talk about reasonable comp and you did that. So I think we're pretty good. It just doesn't seem to fail. Sometimes people think this is challenging. And the one thing I do hear is when is the best time to do this? Like, should I wait now that we're kind of already into the year to wait until next year? I tell people the only reason to wait is if you'd like to knowingly overpay tax instead of unknowingly overpay tax. So yes, if you change now, you will get 2 1099s from your brokerage this year. You'll get one from January 1st through your change to Joanne Coons, the individual, in the Social Security number, and you'll get a second one to the PLLC with the tax ID number. So one thing I like to tell people is if there are subscriptions to be renewed or memberships to be renewed, you'd want to renew those now on the more expensive income, like do that now so that it offsets your Schedule C income. And then you'd have lower expenses against your S corporation. And that's going to be at the lower tax rate. So okay to have profit there as opposed to on the S corp return. It's very important that we confirm that your first check after the change is to the PLLC, because we have had, how many times have you gone back, Marina, to the brokerage and say, please reissue the 1099, and they say, oh no, they never turned the form in. So if that check isn't coming to the PLLC, that's an indication that your transfer isn't complete. And so it's a good time to get out ahead of that rather than at the end of the year when the 1099s come.
I'm glad you brought up the 1099. One of the things that I wanted to highlight is that there's a new 1099. I'm sure that everybody's sort of on board with this already, as we're now into almost the end of February, but there's a new 1099 this year. It's 1099 NEC. So if you are operating as a sole proprietor, the income that's reported to you is not going to be coming on a 1099 miscellaneous, which was MISC, but it's going to be coming on 1099 NEC, which is a non-employee compensation. And that form is really meant to really compensate those self-employed individuals that are working. So if you are a realtor who's just operating under their personal name, the 1099, you should be getting a 1099 NEC from your brokerage. You should not be getting a 1099 miscellaneous. 1099 miscellaneous form is still out there, and it's now used for anything that's other than the non-employee compensation. So reporting rent payments, payments to an attorney, any other settlement fees, any other income that you would have received that's received by you and not in the capacity of a business person. It's also very important to understand that once you become a company and you are elected to be treated as an S corporation, the brokerage is not obligated now to issue these 1099 forms to you, the S corp, because these forms are really meant to be issued to an individual. So a lot of times my clients come to me at the end of the year and they had converted, they only get the 1099 for part of the year, and they get no reporting for the other part of the year that they're now PLLC, taxed as an S corporation, and they say, what's up with that? Well, it's because the brokerage is not required, or anybody for that matter, is not required to issue these forms to a corporate recipient. And the S corp is definitely falls under that. So what does that mean? If you really need a confirmation of the income that you were paid, you can go to your broker and just have them pull a report of your earnings. So you can do that year-end earnings report, and then the broker can easily pull that for you. But don't expect the 1099 form is coming. So that I definitely wanted to highlight. That's also the same form that you should be using if you've got assistants or any of the other subcontractors that you've paid. Please use the 1099 NEC to pay any commission or anything like that to them. I wanted to definitely mention that. One other little tidbit that's brand new under the new tax law this year is in 21 and 2022 is the meals expenses 100% deductible. It's unprecedented.
They still take some meals personally, but
correct. Which is probably even more reason to actually keep track of proper meals, because I can just see that now that is going to be a big change from last year to this year when you report. And we always tell that if there's any big changes that can trigger IRS to look at it. So if the meals went from 50% deductible to 100, but now they've actually quadrupled from last year, then I think that you may be asking for someone to take a look at what that is. So most definitely the meals have to be reasonable, and the entertainment expenses are still not deductible, so nothing's changed there. But I think the key here was to encourage the people to go out to restaurants and keep the restaurant business open.
One last thing for transition then I'll touch on is teams. Keep in mind your team cannot be a PLLC because FREC will not license a team. So you cannot have Team Kuntz PLLC. You can have Team Kuntz LLC. Particularly if they're spouses or 50-50 partners, we like you to have your own PLLC that are owners of the team LLC. That helps eliminate 3 S-Corp returns and let us S-Corp only the team LLC. So you'd report all your expenses through that. You still have to earn your commissions through the PLLC, but we can transfer that revenue up to the team bank account, track those contributions, pay all the expenses for each member of the team out of the team account, and have one tax return. That will keep things simpler. You'll still have your 1099 to report on Schedule C, but we'll zero it out and move all of that activity over to the S-Corp return. That's permissible because the IRS, we put a notification on there that that FREC won't allow the team to earn the revenue. Otherwise, the IRS would be mad about all that income shifting, but it's permissible in this circumstance because the licensure requirements. So if you have a team, that's kind of a whole nother animal, but the team S-Corp would still benefit from all of those same savings that we were just describing. Okay. Questions, anybody? Seasoned pros out there. We're always available for questions. If you have them afterwards, you're welcome to reach out. Everybody has our contact details, I believe. If not, Heather can get them to you. And if you do need anything for this season, let us know, because it's a long, busy one.
Mm-hmm.
So I have a question.
Yeah.
I'm brand new, so I have no income yet, but I've had expenses. Like I bought a new laptop and all the fees. Is that okay?
Mm-hmm.
It's okay to write.
You're not commingling yet because there's no LLC yet, and you can certainly write those expenses off as startup, against your income once you have it.
Mm-hmm.
Okay.
Just
is there
track.
A list? Okay. Is there a list of like allowed expenses for when you are self-employed and that are generally okay and nobody's going to call you out?
Yes, and we can email that over.
In fact, I think the presentation that was distributed today from us has, yeah, there's a tax, kind of like a typical realtor tax deduction, which is, of course, also your normal business deduction. Generally, Debbie, for the expenses to be deductible for IRS purposes, they just have to be reasonable and incurred in a normal course of business. So the threshold is really low. If it's something that you needed to get you in a position to earn the revenue, it was necessary and it was reasonable, then you're good to go. And so the list that we have put together here really has very kind of like a typical realtor deductions. You may not call them the same thing that we would have called them, but I think going through that gives you a good idea of kind of the typical things that you will start to see, especially as you start operating more and more. I did want to also mention that a lot of people get a little nervous when they show a loss from the business in the first year or two. That's absolutely okay. IRS is not going to come back and say, oh my God, you have a loss, it's disallowed. IRS is looking for hobby losses. And for them to call it a hobby, which often we say, are we running a hobby because this is crazy? I mean, are we really doing this for real, or is this a hobby? But what IRS is looking for when they talk about hobby is not that you're not getting paid enough, is that you're showing consistent losses for about 3 or more years in a row. Okay, so again, that's not to say that they will immediately send you a notice and disallow these losses, but it's something that may raise a question for them to reach out. Certain businesses may not have enough of that startup time. There may be businesses that may be a tech kind of business, that's got a lot of time you dump into it and a lot of expenses until the product is ready and sold. There's also farming businesses where you spend a lot of money and then you plant certain things and they are not necessarily blooming and ready for sale for years. So it definitely depends on the type of entity you have, but I would say that if in the first 3 years you've got a loss, that's not an issue. You definitely want to start looking at hopefully turning it around. I think after 3 years, if you're not really making a positive profit, you may want to rethink.
Call it, yeah, you call it a day and find a new profession, I think.
Exactly.
Okay.
Mm-hmm.
Okay. And then does that rule, well, not a rule, but that 40 grand, is that still like where somebody would want to do something different other than being self-employed?
Yeah, I think the PLLC you definitely want to start out with right away because of the liability protection, but converting that PLLC into an SCorp tax election, we kind of look at roughly around 40,000 of the mark, where the separate filing and doing the payroll setup is really worth the savings in the self-employment tax.
Okay, but then if it's a PLLC, I mean, then am I still getting paid like in my own name, or is the company is getting it? So then there's a whole different.
Mm-hmm.
Okay.
Yep.
Okay.
Yeah, you're still going to get paid in the company. Even once you form the PLLC, it's just at which point do we switch you for tax purpose to go from sole proprietor to an S corporation filer.
Okay, so the whole thing still goes with FREC doing that whole thing. As soon as you do the PLLC, you have to do all that other stuff.
Oh, yeah.
Correct. Mhm.
Okay, and the reason to do the PLLC is for liability purposes.
And for
So-
flexibility, so if all of a sudden you take off, because what I've been lied to once before. What people say is, when I get busy, I'm gonna call you back. And then the problem is then you're busy, so you don't call back, and then you get killed on the tax return, and then you come in and you're like, oh my God, I know I should have done this. If you've got the PLLC, Marina can backdate the S-Corp election because you've earned the money in that company.
Mhm.
If you do not have the PLLC, your commissions cannot be protected from that tax until you move it. So if you start out that way and then all of a sudden it goes gangbusters, all we have to do is write a letter to get your late S election accepted on the next tax return. We just put in a phrase, a reference to a revenue procedure on the tax return to say, hey, this is later than the first 2.5 months after formation. Maybe it's 2 years later, and that's okay.
Mhm.
And we say, hey, please make this an S corporation effective 1/1/2023.
Mhm.
And you're making that election in April of 2024.
Mhm.
But if you didn't form it and then you have that killer year, you're stuck with the higher tax, and there's no way to backdate it or fix it then.
I got you.
It's also
Okay,
an insurance policy on the tax.
okay. All right. And then one other thing. So you talked about like when your expenses or something, all of a sudden they get like much higher than they were before, and then the IRS might question you on it. But so like if I'm just starting out and it's the end of the year, it's the expenses aren't very much, and next year as I'm going along, I might add more equipment or whatever. You know what I mean? So that it's kind of almost like as your business grows, your expenses
Absolutely.
are going to grow also.
Mhm. Absolutely. So yeah, your expenses are definitely going to grow as your business grows. And I think where sometimes the trigger may be is that your revenue stays the same, but then your expenses go up, which also may be in the normal course of business because you may be putting money in for a new business line or something else you're doing. And nothing is going to guarantee an audit. That's the other thing. And people are afraid of IRS. But to be honest with you, less than 1% of all tax returns get audited. Less than 1% of all tax returns. It is incredible. So when we talk about audit triggers, it's not an automatic thing. We just want you to be mindful of anytime there's a change, we may say it's an audit trigger. Just like same expenses go up, same as income. If your income has doubled from last year to this year, it's a potential audit trigger. That doesn't mean that you're going to get audited because, of course, your goal is for the business to grow. But the key with the audit is that you've got documentation to back it up.
Right,
so if you're going to say, you know what, my mileage has doubled because now this year I just started and we didn't have any driving because it was COVID. Now we're back on the road and we're driving like crazy. And now my mileage has quadrupled from the year before. You've got a mileage log. And so anybody knocks on your door, here's my mileage log, here's my printout from my app, and this is my backup. Same thing for all the other expenses and same thing for your income, which again is having the system that's available to document your income and expenses becomes key, is because again, as your business shifts and grows and goes down and goes back up, any of those things that could potentially trigger a question, you've got the backup for. Oftentimes IRS, when people also hear IRS audit, that doesn't mean they're going to come and audit. It's not like those memes that you see where, the person is like going through your filing cabinets and pulling everything out. No, what they would do first is say, hey, give me the backup document for this line item, advertising expense. They may randomly pick, and then if you've got the backup for that, they will go away. That sometimes causes them to say, you know what, if you were such a hot mess and couldn't provide me with your advertising expense backup, what else is there that's funky? And then they may dig deeper. So if you've got a good system, that line audit or desk audit or whatever the simple thing that it starts out to be will not escalate to anything else. It will just be left as that. Sometimes they'll just question charitable donations, they'll question mileage. They may question these funny things like the office expense just randomly. So they're not going to come and put your whole life upside down. And so really having the backup for those things at every year is important.
Okay. And you mentioned mileage. Is just like a mileage app okay? Is that sufficient? just to
That's
do the app?
perfect.
Mhm.
Okay.
The nice thing about it is it's running whether you think it is or not. So it's very easy for you to, maybe you started out to Publix and you got a sign call. So now you've just turned around and you're going to show property. It will capture that. Whereas if you were just trying to log in a journal, you might not remember that. It'll also capture those little pit stops. You stopped at the sign place, you stopped at Lowe's, you stopped, you know, those little things all add up. And there's something that people overlook frequently when they just say, well, I'm always working. I'm a realtor, I'm always working. Yeah, but not all your mileage is business mileage. And well, I take 90%. Well, if you take 90%, you might still be leaving some on the table.
Mhm.
And the IRS doesn't have to accept that estimate of 90% of your miles with your oil change records. They can say, no, contemporaneous record is what you're required to keep. So if you don't have a log or a mileage app, they can say your mileage goes to 0.
Okay.
It just depends who you get as the auditor. There's only one lady in Sarasota that's fond of doing that right now on the current staff, but I have seen her do it. Like, oh, you don't have a record? 0. And
Yeah.
a record is not go to your Outlook calendar and recreate, oh, I showed the Smiths, they were in town and they went to these properties. You're supposed to do it as you go. And there's a wide variety of interpretation on what the audit examiners will accept at the IRS, particularly locally. But it's kind of like grade school. If your handwriting's good, you're more likely to get a better grade. If you've got a record for this, they're less likely to fuss with you on other stuff that might be more difficult to document.
I got you. Okay. All right. Thank you.
Yep. Perfect. Well, thank you all so much. If there's no other questions, we'll let you get back to work. I feel like we did a good job on time.
Yeah, I was also looking into chat, but there's nothing. Yeah, awesome. Thank you, guys.
Thank you so much.
Our pleasure. If you need us, let us know. We'll just be cranking out tax returns.
Do you want to give contact info before we go, or maybe in the chat, or?
Mhm.
Oh yeah, I can paste some in the chat. Leave this and
There we go.
MP, you can do yours.
There you go. Thank you.
Thank you, thank you, thank you.
All right, guys, have a good one.
Bye-bye.
Bye.